Greetings and thank you for dropping by for the latest edition of Mentor Mike's Market Movie. Today is Friday, September 28th, 2012. And as you can see, we are all set up for our replay. But first, let's take a look at the charts from some of the other trading days this week. Here's our chart from Monday, September 24th. We started here in the pre-market. We had a short trade, long trade, which I didn't actually take. Then the market took off to the upside, and we had three trades in a row here because what was happening is we would hit the first target, and then the market would come back down and hit our stop. Finally, on the third try, we got at least as far as the second target, I believe. Then we had a nice little short trade and a long trade here. The better place to have gotten in would have been here, but I didn't. I got in sooner than that, so I had to sweat for a little bit. But it ended up being a successful trade, as you can see. And then there was one more potential short here at the end that we didn't take. And this was a 4 delta turning point day. We began with a low. We had a high-low zigzag in the middle, and we ended on a high. So on Tuesday, we had the continuation of that high, and then pretty much the market was all down from there. Now, when we began the day, you can see that the trend-defining moving average was pretty flat, so I was basically trading from the outside in, as I described in my webinar is what I meant to say. Anyway, you can see we're going up and down here pretty regular, and then finally on this short trade here, the market broke to the downside and pretty much stayed there. So caught one more good with the trend trade, and that was about it. Here is Wednesday, and we had a couple short trades in the pre-market, which I wasn't around to take. A good short right after the market opened, a couple of longs, 3 longs actually. Went for a 4th long and had a little bit of a loser there. Quickly recognized the error of my ways and reversed to a short that was successful. So overall, it was a good day. Gave back a few hundred here on this loser. So because we had a loser here, this is the day that we're going to use as our replay today. This is Wednesday the 26th. And we had a low, high, low. And this then is Thursday. Short trade that spanned the open, and then 3 long trades and a couple of shorts at the end. High, low, or excuse me, low, high, low, and I have the question mark here because we don't know if this is going to be the lowest low and then we're going to go up, or just what's going to happen. And as it turns out, the low continued, and that was our first turning point for Friday. And I should have put a question mark here too, because we don't know if this is going to be an actual low or where Monday is going to end up, but this is how it looked for today. I missed this long trade here because around this point here, I took the rest of the day off, and my wife and I went to the Getty Center Museum here in Los Angeles and looked at some art and had a nice lunch out and enjoyed the still hot but somewhat balmy weather. So this then is our high-low turning point chart for the week. You'll recall that this particular chart shows the day sessions only. So the span between the session ending lines here is from 6:30 a.m. Pacific time to 1:15 p.m. Pacific time. So it's just the day session, no pre-market, no aftermarket. And what's interesting here is, in addition to the turning points throughout the day, you can see that on each day there was one specific major league turning point. We had a low on Monday. Then we crossed the trend-defining moving average, had a high the next day, Tuesday, low on Wednesday, high on Thursday, and low today. So it'll be interesting to see if this oscillating, alternating, high-low feature continues into next week. I went back a ways, and it does continue for some time, but there are places where you are going to have a trending market that does not alternate every single day. But this is what it looked like this past week, and again, this is the day that we're going to replay here today. This is Wednesday the 26th. So let's go ahead and get this down. Now, there's one other thing I wanted to address before we get into the replay. This is a comment that was sent to my not my website, but the Pacific Trading website, to my blog. And some of you might have similar questions to this young man or young lady, whoever it happens to be. Anyway, they say, "Hi, Mr. Bridges. Just wanted to know why you're not using the Go for the Gold template these days. Can you talk about advantages and disadvantages of using Go for the Gold versus Chaos Combo? Understand injuries are late with Go for the Gold. Any thoughts or progress with regard to chat room or trading room, subscription-based room you were talking about? Appreciate your videos. Very helpful. Thanks a lot, RK." Well, RK, I appreciate your appreciation. First of all, the biggest difference between the two templates is that all of my parameters use Fibonacci numbers, as you may have heard me say before. But on the Go for the Gold templates, the Fibonacci numbers are, I believe, 3 intervals apart on the Fibonacci sequence. And so there's a greater distance between the fastest, most sensitive moving average and the slowest moving average. And so it takes a little bit longer for the red, white, and blue alignments to occur. And for some of my students who are very literal in their interpretation of the red, white, and blue alignment, they are reluctant to take trades where the alignment is not fully in place. And obviously, that's not always the case when it takes longer for that to happen. So in the Chaos Combo and other chaos-related templates of mine, the span is much closer. There are only 2 integers apart on the Fibonacci sequence. That means that the red, white, and blue alignments happen much faster, and so the literalists in the crowd will find it easier to spot their entry signals when they're looking for red, white, and blue alignments. As for the trading room, I haven't completely decided on that. I haven't completely discarded the notion either. I'm also looking for some affordable space close to my home where I might be able to have a live trading clinic for people who reside in the Southern California area. But one thing's certain, nothing's going to really happen until probably the spring of next year. So as long as the Mayan prophecy does not come true and we're still around on December 22nd this year, then there's a good chance that we might see something happen in the spring of 2013, but not before that. So anyhow, if any of you were wondering about any of these questions, there's your answers. Let's now go. We don't need to say that. Let's do our replay now. Again, this is Wednesday the 26th, and let me get my little dashboard out here. And let's go ahead and start up the data feed. And we'll bump it up to 50 times normal speed initially. And you can see things are pretty flat right now. There's a little teeny downward bias to the trend-defining moving average, and I was a little slow on hitting the pause button there. We've crossed the parabolic on the stochastic. We've got a cross on the MACD, and we just flipped the parabolic up here. So let's go ahead and get short, and we'll make our arrow and start up again. There we go. Those flashes of red, as most of you know, means we're making a new daily low, or tying the existing daily low, as the case may be. Okay, stopped out. Now, I'm going to go a little slower because we still have a pretty good downward slope going here. And if this thing starts to drop, I don't want to miss my opportunity to enter anew. Okay, and there it is. So let's short it again. There we go. Okay, stop that again. Remember that green dashed line that we're approaching there marks the beginning of the day session at 6:30 a.m. Pacific. Okay, and pretty much all at once here, we have flipped this parabolic, bearish cross on faster MACD and bearish cross on stochastic. So let's go ahead and enter another short here. And finally we hit all three. All right, now observe we have a crossover on the stochastic, but it hasn't left the oversold zone yet. We also have a cross on the MACD now, plus the faster MACD is kind of inside the silhouette of the longer MACD. So let's see if we can get a little bit closer up the hill here, maybe flip this price parabolic. At the same time, we want to get in as early as we can. And we're starting to emerge here from the oversold zone. We've still got a ways to go to flip this parabolic, but I think that given the posture of the MACD, we got an upward curve on the longer MACD, and we're about ready to pop out of the oversold zone here. So let's go ahead and get long and move this up a little bit. And arrow and data. Okay, the parabolic is flipped. First target, second target. Now, why would I get long there, you might ask? Well, aside from the fact that we have crossovers on the MACD, the stochastic was definitely oversold and coming out of the oversold zone. And we're also in the window of opportunity for that first delta turning point marked by our red line here. So there's a pretty safe bet that that's what's going on. Okay, stopped out. Whoa. Okay, now, probably should have been going a little slower, so do we still have a shot at this? Maybe. We haven't flipped the parabolic here, but I don't want to really chance this thing going too much higher. So let's go ahead and get long and hope that we have enough left here to at least hit that first target. Well, where's the first target? We didn't move the stop, however. Oh, there we go. Okay, and we're stopped out. Okay, now here's where I went long and had that losing trade. So let's see what I did wrong. I also was talking to a student that same day, made the same mistake. It looks like we've got a red, white, and blue alignment, and it looks like we're breaking above the trend-defining moving average. The one thing that doesn't look so bullish, though, is the fact that the trend-defining moving average itself is sloping down. Also, our white moving average is sloping down. I have learned from experience that the white moving average tells us a lot about the upcoming direction of the trade. Down here in the MACD, we have the white signal line drooping pretty good too. Don't quite have the cross on the MACD. Do on the Stoke, and plus we're apparently showing support on that 50% moving average. So there's a lot of reasons why we might take this trade, but I know if we do, we're going to have a loser. So instead, what we need to focus on is a couple of things. Long-term moving average, the trend-defining moving average is sloping down. Also, check out our longer MACD. Now, I realize this might be a little bit hard to see because we have two speeds kind of on top of one another. But here's the line for the oscillator on the longer-term MACD. The red is actually the signal line. So here we're above the signal, and we're still above the signal at this point here, but we're really, really close. And we've had what appears to be a low here, and we could just keep on going and end up with a two turning point day. That's not out of the question, but let's just go a little bit further and see what develops. As I recall, all right, now check this out. We flipped both parabolics, and we've got our MACDs heading down and a red, white, and blue going on there, and we've got our stochastics flipping as well. So if we just waited a couple more bars, the picture would have changed dramatically. So I'm not totally beating myself up for having taken that long trade and having the loss, but if I just waited a little bit, if I'd been more vigilant and paid more attention to the longer term MACD and the slope of the trend defining moving average, I probably would have waited. And if I had, I would have seen this. So we are going to go short instead of long. And that's more in keeping with the fact that we've had a low here, a delta low, so now this looks like our high. So let's place the trade and start the data. Finally. Yeah, I was stopped out by a rogue spike there. Okay, well, I do believe that was the last trade of the day. Somehow I managed to avoid that spike last time. I'm not sure how that worked, but in any event, let's just play it out. Probably could have hit the first target again if we re-entered, but let's not sweat it. Okay, so we're past the closing point. All right, if we traded this then, as you see here, we would have made $1,925 using 9 contracts, and we would have had 6 trades to do it. So that's about how much we made on Wednesday. But then I think I gave about $500 or $600 back on that losing trade. So that was a stinger, but we still came out okay. And this is how we did it today. So thank you for dropping by. Come back and see us again real soon.